Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Monday, June the 5th, 2017, and this is the Daily Report for Gold and Silver. After seeing gold and the precious metals complex as a whole rise dramatically over the last couple of weeks, we saw modest to moderate gains today across the board in the precious metals markets. Gold closed up about $1.30 on the day, a net gain of about 0.1%, closing at $12.8150. The key that it is over $12.80 isn't important to me, but it's the narrowly defined range, of course, that is the overall characteristics of the market today, with the market trading to a high of 86 and a low of 1280, a mere 6-point range during today's trading activity. Over to silver, just as quiet, about a half a cent change in silver pricing, $17.53. It has traded to a low of $17.49 and a high today of $17.65. Of course, we are long our gold position, and as I mentioned on Friday, we will look over the next couple of days to trail our stops higher. So traders, the fact that gold prices did in fact close above $12.80 today to me is pretty significant. However, what is most significant about today's trading activity is this narrow range that we have witnessed with a high of 86 and a low of 80. We're looking at a $6 range. Of course, with testimony being set for Thursday and two other very critical events really unfolding on the same day. The European Central Bank is having a monetary policy meeting, as well as an election in the United Kingdom. We could certainly see some real fireworks as we go into the end of this week. Up until that point, though, traders, I would not be surprised to see the underlying characteristics of this market be muted with a wait-and-see attitude as traders and investors try to gauge the outcome of these events as they begin to unfold. Now, one thing that we do want to take a look at on a technical basis, and we touched upon this a little bit last week, is this 50-day moving average. And as it moves up, you can trail your stop behind that. Right now, our stop is below 1255. You could move that to below 1258 based upon the 50-day moving average. And that is a way you could trail the stop up throughout the week and do that without waiting for a special trade alert. Simply look at the current price of the 50-day moving average, which of course will be displayed on each of our daily reports. For the interim between now and Thursday, we are also in a holding pattern, a wait-and-see attitude, as we position ourselves for any kind of events that unfold that would move gold's needle, the price, to higher ground, and to also tighten our stop to such a degree that if in fact we see some weakness come into the market in terms of gold itself, gold prices, that we have locked in either the smallest amount of a loss or we have locked in some profit into the trade. Again, we are in at 64 and the market is currently trading at 81. And traders, finally, do want to take a quick look at gold through the eyes of a weekly chart. If you recall, in terms of our long-term analysis of this market, we identified a three-candle pattern, simply called a three-river morning star. That would be back now going on 3 weeks ago. We absolutely got our confirming candle the following week, and then last week we got what's called a continuation candle. A continuation candle on a pattern such as this occurs immediately following the confirmation, and it is a candle that, simply put, is moving in the overall direction of the current trend, which we have identified as being up. Now, of course, this being Cycling Monday, the fact that it's small-bodied and the fact that it's red is really not giving us a lot of information, because as we talked about, the overall characteristic today, and I believe throughout this week, is going to be muted activity as we await these series of events to unfold on Thursday. Until then, I would expect prices to hold firm and solid, but not too much to the upside or downside in terms of a daily range. In other markets that we follow, U.S. equities had a very, very muted tone today with small drawdowns across the board in the Dow Jones Industrial, Standard & Poor's 500, as well as the NASDAQ Composite. 0.1% loss in the Dow Jones, closing off by about 22 points at 21,184. Standard & Poor's losing about 3 points at 2436. And the NASDAQ Composite losing almost 0.2% at 6295. Lastly, dollar index muted but slightly higher today. The key right now is the triple witching events that will all occur on Thursday of this week. Of course, the most important, I believe, is the testimony by James Comey. And traders, while the testimony by the former director of the FBI will have or could have a tremendous influence in terms of U.S. equity pricing, it would also have a major influence in terms of the dollar. The statements that he makes, the evidence that he presents, and the tone and content of this testimony could either be very supportive of the U.S. dollar, or it could be a force in which we see the dollar come under tremendous pressure. Now, as you know, I have been looking for the dollar on a technical basis to trade or drift lower, but possibly find some support at around 96. If in fact it continues to track and break lower, and if it remains under pressure, the next real price point that I would look at would be 95 on the dollar index. And traders, as far as U.S. equities go, we did hit all-time new record highs at the end of last week. Today's pricing puts us in that territory. We didn't see much of a drawdown, and we honestly believe, many traders believe, I should say, that we should see this market hold steady, at least going into the activity and testimony on Thursday. Of course, that could put tremendous pressure on U.S. equities markets, or we could see some kind of a relief rally if, in fact, the testimony doesn't result in any major political turmoil. So, traders, as I spoke about during the technical studies portion of the show, it's all about Thursday and the events that will occur that will really move the market. I would not be surprised if we saw muted trading activity not only in U.S. equities, but bonds, as well as safe haven assets such as gold and silver up until that point. As we talked about in our opening letter, depending on how that testimony unravels will really determine the influence that it has not only on equities but gold pricing. If in fact Comey presents some sort of evidence, which I believe is highly unlikely, we could see some real fireworks and the beginning of a major political mess here in the United States. My recommendation is obviously to maintain our current long position in gold, to maintain our current stop. As I said, we will look to move that up later on this week. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.